From Daily Forex, this is Chris taking a look at the Tel Aviv 35. The Tel Aviv Stock Exchange has been on fire for some time, and of course, the top 35 stocks have been a major influence on this as pharmaceutical, banking, etc. has done fairly well. Currently, we find ourselves in the midst of trying to recover from a pullback that saw the 3,300 shekels level tested. The market looks as if it has a bit of a barrier in the 3,500 shekels level, so we'll just have to wait and see whether or not we stay in this range or if we do continue to go higher. We initially pulled back only to turn around and show signs of strength. This is a market that a short-term pullback opens up opportunity. This is a market that I think, given enough time, will continue the overall trend, but maybe we just need to digest some of these massive gains for a while. This index basically mimics the NASDAQ 100. If you look at it, you overlay a chart, and therefore it is going to move in a lot of the same ways. With the pharmaceutical and bio related companies, it makes sense if you think about it. Questions about stability in the area have been resolved, so that of course helps Tel Aviv as well, and it is rapidly becoming a destination where traders are putting money to work. If we were to break down below the 3,300 shekels level, then it opens up the possibility of testing the 50-day EMA at 3,250 shekels, but we'll just have to wait and see whether or not that happens. Really, at this point in time, it's not until we break down below 3,000 shekels that I think the index is in trouble. It looks like a market that has had a nice little correction and it's ready to rise. Pay attention to New York. They generally set the tone. So if we see strength in New York on Friday, then maybe it rolls over into Tel Aviv in the following week. You also want to pay attention to Tokyo, London, etc. But New York seems to be the one that leads the rest, and we'll just go from there. But at this point, looks like a buy on the dip index.